All right, hello everyone. Welcome back to the channel. Excuse me. Today we're going to do our crypto show today. So with that said, let's get started. Share my screen. All right, there we go. All right, our first article got a full docket tonight. Our first article comes from A&B Crypto. Cryptopia enters liquidation phase as it appoints Grant Thornton investigation to take months. Cryptopia, the New Zealand based cryptocurrency exchange, announced the appointment of Grant Thornton as its liquidators. This announcement was made hours after its customers raised concerns over a long unscheduled maintenance, resulting in some speculating another hack. Notably, the firm chose to take the step of liquidation because of the hack that occurred earlier this year, in mid-January 2019. The exchange announced a security breach, leading to a massive loss of funds. The majority of the stolen funds belong to its Ethereum wallets, with reports suggesting that the breach cost the exchange a whopping 16 million in Ethereum and ERC20 tokens. However, the exchange soon fell victim to a second attack, which took place days after the first one. The second attack reportedly drained 17,000 wallets, resulting in the loss of 180,000 in Ethereum. This was soon followed by the exchange releasing a statement on the loss incurred due to the security breach, where the worst case scenario was considered to be the loss of 9.4% of its total holdings. Following this, the exchange gradually reopened its services in March 2019. The latest announcement stated that two officials from Grant Thornton, David Roscoe, and Russell Moore will be carrying out the liquidation process of the exchange. David Roscoe stated that the investigation process could take months instead of weeks, citing the complexity of the case. He further added, and I quote, "We realize Cryptopia's customers will want to have this matter resolved as soon as possible. We will conduct a thorough investigation, working with several different stakeholders, including management and shareholders, to find the solution that is in the best interest of customers and stakeholders." And in quotes. If you all don't know, earlier this year in January, Cryptopia was hacked and their account, their exchange shut down because of the hack. And the interim since then, they opened up the account where they allow investors to cancel their positions. They did not allow withdrawals or deposits. Now out the blue, because I guess because of the sheer amount that was taken, they were illiquid. They now are liquidating. So Cryptopia is biting the dust. They're no more. I put this on the docket because this hack occurred in January, which was before the Binance hack. But this goes to show that these exchanges do not are not ready for the large influx of investors. I understand we all want the crypto market to go to the large influx of, excuse me, investors to go up, to go on the bull market, but these exchanges are not ready. When you have a large influx of money, more people creating accounts, that scaling, you're painting the X on your back of, hey, we hold all this money. Now you have these team of hackers coming in trying to hack your account. We have the Quadriga CX thing happen going on, which this really is a muddy situation. It's a lot of investigation going on upon that. But now we having these exchanges such as Cryptopia. Cryptopia is one of those exchanges where people can actually go on and purchase these coins that were in a gray area of not top or not low end, not top end or low end, that gray area. And Cryptopia held those type of coins. And also, these exchanges, I don't think these exchanges are practicing good business practice, because if you were hacked and this much amount of your money was taken, that means you held a good significance of your holdings in hot wallets and not on cold wallets, which raises questions, because now you have to, we all say, take your, which is, this is one of the golden rules of crypto, take your accounts off, not the accounts, but your holdings off the exchange. But people don't listen. People don't do that. So now you're trusting the exchange to hold your funds on there, and these exchanges can be hacked. So this goes to show a lot of these exchanges are not ready for a bull market, if you would say, and a lot of these exchanges are not ready for this influx and have the security in place to be secure in the place of DDoS attacks or hacks or that nature. All right, let's get to this next topic. This next topic comes from Cointelegraph.com. I'm going to read this article and the next article all together because they tie into the same thing. Charlie Munger, Bitcoin investors celebrate the life and work of Judas Iscariot. Charlie Munger, billionaire investor and the vice chairman of American holding conglomerate Berkshire Hathaway, again criticized Bitcoin financial markets focused news outlet. Criticized Bitcoin financial markets focused news outlet Markets Insider reported on May 4th. Munger, who was invited to an event by an unnamed digital currency investment group but did not attend it, stated that Bitcoin investors celebrate the life and work of Judas Iscariot. Munger thus reiterated his negative stance towards cryptocurrencies. Last February, Munger described the leading cryptocurrency as totally asinine at the 2018 annual general meeting of the Daily Journal Corporation. He then stated, and I quote, "And I think the people who are professional traders that go into trading cryptocurrencies, it is just disgusting. It is like something else is trading turd, and you decide I can't be left out." End quote. As Cointelegraph reported earlier today, Berkshire Hathaway's chief executive officer and chairman Warren Buffett, who is also well known for his scathing stance toward cryptocurrencies, again derided Bitcoin for its purported lack of real use value. Buffett likened the coin to a seashell that just sits there. It's like a seashell or something, and that is not an investment to me, Buffett said. Last year, Chatham Palihapitiya, a self-professed disciple of investors Warren Buffett and Charlie Munger, said that the two crypto skeptics are wrong about Bitcoin. Regarding Munger, Pilahapitiya said, "I think it's really unfair to not understand something and then to disparage it. Bitcoin is currently trading." I'm not going to read that. But I'm going to tie this in the next article, because this article really hinted at what Warren Buffett said. This one comes from CNBC.com. Warren Buffett says Bitcoin is a gambling device with a lot of fraud connected with it. Warren Buffett's aversion to Bitcoin just escalated. It's a gambling device. It's been a lot of frauds connected with it. There's been disappearances. So there's a lot lost on it. Bitcoin hasn't produced anything, Buffett told a group of reporters ahead of Berkshire Hathaway's annual meeting at the CHI Health Center in Omaha, Nebraska. "It doesn't do anything. It just sits there. It's like a seashell or something. And that is not an investment to me," he added. Buffett even compared the cryptocurrency to a button on his jacket. "I'll tear off a button here. What I'll have here is a little token. I'll offer it to you for $1,000, and I'll see if I can get the price up to $2,000 by the end of the day. But the button has one use, and it's a very limited use, Buffett said. However, the Oracle of Omaha acknowledged the blockchain technology that Bitcoin is built on has some promise. Blockchain is very big, but but it didn't it didn't need Bitcoin. JP Morgan, of course, came out with their own cryptocurrency, Buffett said Saturday. Asked if Buffett will get involved with blockchain, he said, "We are probably doing it indirectly, but no, I wouldn't be the person to be a big leader in blockchain." So this goes to show that these two people, Charlie Munger and Warren Buffett, don't know about cryptocurrencies, don't know how it works, don't didn't take the time to learn about it, and now they're casting opinions on it. By him saying that it just sits there, that goes to show that he doesn't know what Bitcoin or I'll just say cryptocurrencies are. It's programmable money, it's digital. You can add anything to the blocks on the blockchain, any information. As we went over on our blockchain talk this past Saturday, you can add voting records. You can add a lot of information to those blocks that these cryptocurrencies are built on because of the underlying technology, blockchain technology. And he said that blockchain is very big, but it didn't need Bitcoin. Again, he doesn't understand. Bitcoin and blockchain came to the party at the same time, and they both are built. Bitcoin blockchain used Bitcoin success to come to the limelight, and Bitcoin is built on blockchain. Now, another reason why, and did a little research about these two bashing cryptocurrencies, both Warren Buffett and Charlie Munger. Charlie Munger is the, I think, CEO or sits on the board of Berkshire Hathaway, Warren Buffett's company. Somebody tweeted a tweet, and this is the tweet. It says half of his largest investments are banks and payment systems. And it's Bank of America, Wells Fargo, US Bancorp, American Express, JP Morgan Chase, Goldman Sachs. Does it really surprise you that he bashes the one technology that could eliminate those companies? Now, we know the Federal Reserve owns the money supply that's in circulation in the America. Federal Reserve doesn't have anything to do with the American government. Federal Reserve is a for-profit organization. You can't invest in the Federal Reserve directly, but you can invest in the Federal Reserve indirectly through the banks that hold a piece of the Federal Reserve. When the Federal Reserve creates money, the banks are the first ones to get that money and they distribute it out. The bigger the bank, the bigger portion of the pie it holds within the Federal Reserve. It holds of the Federal Reserve. So you can invest in those banks, and those banks are for-profit organizations. So you can indirectly invest in the Federal Reserve. Now, half of Warren Buffett's investments are banks and payment systems, which I said are Bank of America, Wells Fargo, US Bancorp, American Express, JP Morgan Chase, and Goldman Sachs. I'm not going to play this video, but there's a video on YouTube called How the Federal Reserve Works, and it comes from the YouTube Business Casual. These, as you see on your screen, are some of the biggest banks that have the biggest investment in the Federal Reserve. JP Morgan Chase, Bank of America, Citigroup, Wells Fargo, Goldman Sachs, Morgan Stanley, US Bancorp, TD Ameritrade. So let's compare. Bank of America, number 2 on the list. Wells Fargo, number 4 on the list. U.S. Bancorp, number 7 on the list. American Express, which is not on the top 10, but it's number 13, I believe. JP Morgan Chase, number 1. Goldman Sachs, number 5. Some of the biggest banks that invest in the money supply, the institution that creates and distributes the money, which is the world reserve currency. He invests in those banks. Bitcoin and cryptocurrencies is a challenger to those banks. So both Charlie Munger and Warren Buffett has a vested interest into seeing cryptocurrencies not survive, not progress. They have a vested interest because their investments are in these banks that cryptocurrencies are a direct competition to. Now, I'm not saying cryptocurrencies will take over the banks. It is a parallel payment system. But because by them being a parallel payment system, that means that they can take a large piece of the pie away from these banks, thus a large piece of these two people's investments. Just be, I also by them saying what they're saying about cryptocurrencies, when he says it's like someone else is trading turds and you decide I can't be left out. It's extremely childish coming from an 80-year-old man. When he says, that's Charlie Munger, when Warren Buffett says it's a button, now I have a token, I'll sell it to you for $1,000. And these are not the only slights that they had that they talk about cryptocurrencies. Um, Warren Buffett said it's like rat poison squared a few months ago. But these two have a vested interest. And people listen to these two people because they are seen and held up as king investors. You should follow their guide. You should follow their practices. And if they say cryptocurrency is for thieves and crooks and pedophiles and all the likes, then you don't want to be associated with that. So when you listen to these two people, you say, well, Charlie Munger and Warren Buffett says this about cryptocurrency. They own Berkshire Hathaway, and Berkshire Hathaway stock is a couple $100,000. So they must be telling the truth, right? And people follow it, and people listen and follow what they say. And those very people are the very people that need to be investing in cryptos. And it's disgusting. So now you have these two people that are telling people not to invest in something. I can guarantee you they're investing in these companies behind the, not companies, but in these cryptos behind the scenes, because it always happens like that. JP Morgan Chase and Jamie Dimon, he was bashing cryptos all the live long day, but behind the scenes, information came out that he was mining cryptos, that he was setting up his own crypto in the JP Morgan coin. And Saturday, we read an article where JP Morgan Chase was redoing their blockchain to have the JP Morgan or JPM coin to be more useful. So and Warren Buffett is investing in JP Morgan. So this stuff is, you have to be careful, even though these people are quote unquote who they are. That doesn't mean that they're correct. How you doing today, Delaware?
How you doing, bro? Can you hear me?
What's going on, Delaware?
Good. Let's see.
Yeah.
Can I take the other side of that?
Yeah, go ahead.
It's complex. Okay, it's a complex design. You brought up Warren Buffett and Jamie Dimon. I think people misunderstand Warren Buffett. I'm going to defend the Oracle. You got to remember, he's one of America's greatest, if not the greatest investor. And he did it based on buying things that were safe, that were utilities, things people really needed. Because if you're talking about investing your money and you're comparing between your options, and you know that people are going to need homes and insurance and banks and like basic things that they can't get out of. Every dollar spent on something that's a gap, that's new, unproven, with a questionable future, why take that risk when you don't have to? And so actually, if you listen to a lot of the things that I said, I'm really kind of on the side of Warren Buffett. In fact, I'm really more like Jamie Dimon. Jamie Dimon and I are on the same point of view. A lot of this crypto stuff is bullshit. It's crap. We don't know if it's going to last. My only interest in it is the fact that a lot of people are interested in it, and that alone can make something go up in price, because I lived through that .com bubble where everything with the .com in its name went to the moon, and it was crap. And a lot of it did die. But I made $250,000 off of crap. And I knew it was crap. Okay. And I think that's where Jamie Dimon is entering. I don't think Jamie Dimon is being hypocritical. He understands how markets work. A company doesn't have to be rational, sound, or even profitable in order to make money in the stock market. That's what he understands, and that's what people don't understand. It doesn't have to be a good idea in order for it to make money in the market. It can be a failure in the marketplace and make money in the stock market. All it needs to do is be popular. And you can do a Google search and see how cryptocurrencies have like mesmerized people. You don't have to be a brain surgeon to see that just that interest alone is going to cause a lot of this crap to go to the moon. And at the end of the day, these guys are investors and they want to make money. Warren Buffett is just a little more traditional and stodgy. Jamie Dimon, a little more willing to be contemporary. And he's like, well, if people are going to make millions and billions off of this cryptocurrency thing, I'm going to get my slice. But Warren Buffett is like, I can, still buy tried and proven things, and I'll still make money. And even if I make less money, I'll sleep less money than a crypto investor. I'll sleep better at night because I know that my investments, the things that I'm investing in, they're going to be here tomorrow for my grandkids. So that's Warren's perspective on it. Warren Buffett has said the same comments about a lot of tech stocks, internet stocks, anything that's new. Warren is not likely, Mr. Buffett is not likely to want to risk his money on it when there's an option available to buy something that's proven that happens to be undervalued. So he's a conservative investor, and the people in his camp expect that from him. They expect to hear that from him. And so when Munger and them talked about from the article, when they validated blockchain, yeah, they can see the utility of blockchain. But cryptocurrency, the jury is out on that. And personally, I don't care. I don't care whether it lives or dies. I just know it's going to make money. And I'm going to invest in it for that reason alone, just like I purchased other crap in the past and made money on it.
I think the problem with cryptos in this discussion, in the context of this discussion, is that because they're decentralized, they're not attached to an institution, so that makes them very volatile, right? So that may be where Warren Buffett and Dimon is referring to, that they're not actually tied in with anything else, but that's their nature, because it's their decentralization of the actual currency is what's actually causing the volatility. Now, if it was like Venezuela, which tied it in with their natural resources, then you may see some more stability. But as it stands right now, yeah, you're going to see a lot of volatility, and yeah, it's going to look like fool's gold. but that's only because one, it's not tied in with an institution, and two, it's not tied in with the decentralization keeps it in free fall or on a bull run. So what I'm saying here is overall, I understand where Dollar Will's coming from, that he doesn't really care about the technical analysis behind a crypto's structure, as long as it makes money for him. That's the fundamental side to me. You really got to understand what cryptos are really useful for, depending on which currency you're talking about and which token you're talking about. So if it was tied in with, let's say if Shell decided to tie in their own Shell token for every liter of gas that you filled up at the station, that's gonna go through the roof at some point.
Yeah, Mike, but
That's
okay,
Mhm.
let me say this. Currencies, all of them, including cryptos, they all are volatile. And cryptocurrencies, I think their volatility is because it's a new thing. But once they started putting those cryptocurrencies into mingling them with other traditional currencies and pegging them, cross pairing them with the US dollar and other fiat currencies, that's going to make cryptocurrencies as volatile as other currencies. So this idea that currencies are stable, that's a myth. That's a myth. Look at
Well,
this. Look at the
stable.
picture of.
So
Look at
I'm
the
saying
picture of.
stable.
Let me just say this. Look at the chart of the U.S. dollar since 1971, and and now you make an argument. I dare anybody to make an argument that that Bitcoin chart looks any worse. That's just what currencies do. But because we have faith in the United States government and the U.S. dollar, despite that death dive since 1971, despite that, we don't go and turn in our U.S. dollars because it's losing value. We go on with life. But because Bitcoin is a new thing, people actually give up their coins. People don't give up their dollars when it declines. So I think it's just a product of it being a new thing.
Because you can't spend the coins anywhere else in your brick and mortars.
That's part of it. Like that's part of being new, right? Right.
But the U.S. dollar, the U.S. dollar is tied in with the military and the institutions that run this country.
Right.
The
So
cryptos are not.
exactly. So the point I'm making that the volatility is all the dollar is also volatile. So I'm saying that cancels each other out. But like you said, the dollar it's the base currency in the world. And it's got the United States government, including its military, behind it. So we have faith in it. But what's behind Bitcoin? So it's going to take a while. But Bitcoin is going to be as volatile as other currencies, and I think that when they paired it with Bitcoin versus the dollar and other major fiats, that makes it legitimate.
Now, even though I will say this, it's fine for. Can you all hear me?
Yeah.
It's fine for them to not know much about it, but then to say the things they say about it, that's why they're getting this much limelight. If Buffett would have said, "Well, no, I don't know too much about cryptos to say to give an opinion on it," then people are like, okay, no, well, he don't know about it. But to say, "Oh, I don't like it. It's rat poison. It's turd. It's a button on my jacket."
Well, from their point of view, they have not been satisfied with the answers to the question, which many very good investors have been asking: what problem does cryptocurrency solve? That one, just naked like that. Then two, couldn't that problem have been solved another way? So
Well,
that's
apparently
kind of where
not
they're
because.
coming from.
Well, apparently not because you're. There's a lot of feedback coming from somebody on the Hangout. Apparently not because you have the democratization of crypto, which is what the main driving force is behind it. The decentralization leads to democratization. The problem with nation state currencies like the euro, like the U.S. dollar, is that your impoverished class or your underprivileged class do not have access to those massive resources. In the crypto market, they can generate this on a whim, and it's actually spendable on the micro scale, right? So person to person payment, nano economics, microeconomics, it works on that level, as long as there's no interference. You don't have access to the U.S. dollar if you are poor, for the most part, which is why you probably see homeless people shaking cups and begging for change. They just don't have access to the necessary resources, without actually doing some extraneous labor or being exploited for that matter. With cryptocurrencies, that's supposed to solve a lot of those issues.
Make that real elementary for me. How when you say cryptocurrency is more accessible, is it easy? I guess you're saying somebody can get up out of poverty through cryptocurrency easier than they can the dollar. Is that kind of what you're saying? If I'm reading that wrong, correct me. And if that is what you're saying, make that even plainer for me, because I'm not getting it.
What I'm saying here is that I'm not saying it gets people out of poverty. I'm saying people who are impoverished, who and have access to cryptocurrencies, can actually leverage it better than what they can if they can for an actual U.S. dollar. So you think about poor people in Africa or in Haiti, for that matter. If they just don't have access to the U.S. dollar, they just don't have access to the U.S. dollar. They're locked out of that capitalist market. What cryptocurrencies have done is that it's allowed people on the ground who have a mobile phone to have access to digital wallets and exchanges that they typically would not have had if they had the U.S. dollar and the stock exchange.
Okay, so couldn't they have just had a digital app on their phone and traded dollars?
Not everybody has the ability to do that. With cryptocurrencies, so I'll give an example. With Venezuela, Dash is the cryptocurrency called Dash is down there, and you have other trading dealing with the Bitcoin itself. Venezuela's petrol is going through million% of inflation. A lot of other countries in the world is going through deflation. Their money is devalued compared to U.S. dollars. So what happens is they now have the ability to go into a crypto via their mobile device. A lot of people in the world don't have stationary computers or laptops. They do a lot of their computing on their phone. So now you have this wallet, digital wallet you can have on your phone and go in and out of your local currency into crypto as a hedge against the volatility of your native currency. That's when we say that's what we mean when we say cryptocurrencies can now help people get access to the American dollar in some type of way. And also you have stable coins that are pegged 1-to-1 with the American dollar. So now you have people that are going in and out of stable coins because they are a type of crypto where they can hedge that against their own native currency going up and down in inflation.
Okay, I guess my response to that is I think it's a myth that you can hedge against losses in your country's currency by going to a cryptocurrency. It depends on which country you're in and which how that crypto behaves, because it's just not always true. It's just not, no, it's just not true, period. It's one world. We live in one complex economy, and nothing stands alone or is independent from the fluctuation of other major goods and services in the economy. So this whole myth of decentralization leading to currency stability, I think that's a myth, and I think that's what probably that's what Warren Buffett and others think too. We'll see, but it does. From my point, as long as people believe it and they're behind it, I'm going to be buying and investing in it. But I'll be getting out of it when the chart says so. just like when it was approaching 20,000, I told people I wouldn't buy it with their money.
That's been happening the last 5 or 6 years with cryptocurrencies. It's been working on the ground, and they figured this out.
Who? Give me an
That's why you
example.
see.
Who did it work for when it fell from 20,000 to to recently to lost about 80, 90, 80 something percent of his value, almost 70% or whatever of his value. Which cryptocurrency functioned as a hedge, as an effective hedge during Bitcoin's decline in that period of time?
What people
I'm not referring to the hedge. What I'm saying here is that the usage of it on the ground, for person to person and micro transactions has been successful. That's why you see I forget the cryptocurrency that's involved in Venezuela. Mino knows the name. Starts with a D.
a dash.
Yeah, Dash. Dash is very popular and has been working diligently at building up point of sales operations, as well as the circulation of cryptocurrencies on the ground through mobile payments and POS. So we know that this is effective, or else they wouldn't have been down there to begin with.
Okay, yeah, we'll see on that. I guess I'm not buying that. We'll see. Because I'm just saying that I'm just saying these cryptocurrencies are not in and of themselves stable, and I'm not saying they're more. It doesn't even matter. There's no such thing as stability. That's really what I'm saying. There is no such thing as stability.
Oh, I don't think anybody's saying that there's stability with cryptos. I think we already said that there's volatility with cryptos. What I'm saying is the access to cryptos is much quicker and more attainable than it would be for a U.S. dollar. Many people in Africa would disagree with you on this, that they have used cryptos on the ground, and even the Zimbabwe government has started to use cryptos as an alternative to their own nation state currency, because their currency is in free fall.
What was that?
So we know that this is happening.
What was the African country that adopted another country's currency? I can't remember. It was one country.
It was Zimbabwe.
And whose currency did they adopt?
The U.S. dollar.
Okay, yeah.
Not necessarily U.S. dollar, but they also adopted the renminbi as well, in the yuan.
Right. So I'm like, why? How's that working for them?
The government adopted it, not the people on the ground. The government adopted it. So in order for the government to do nation state to state business, they had to adopt a different currency. But the people on the ground don't have access to that 100% access to that currency. So what they call that is a convertible currency. This is what's happening in Cuba, right? So Cuba has two different currencies. They have a nation state currency, then they have a local currency. Because the sanctions that the United States has put on them has destroyed their the peso, which is their currency. So they had to come up with two different currencies. What I'm saying here is that in Africa, many of these people on the ground who live in these villages don't have access to the nation state currency as it stands, because it's not worth anything.
Right. I mean, so you're saying even if they had access, it wouldn't matter because it was not worth anything. What I'm saying,
cryptos have come in. Cryptos have come in to replace that.
So why can't the people on the ground have access to the dollar? Isn't that's a political thing, right?
It's definitely political, and that's what cryptocurrencies were designed to do, to get around the politicization of currency and decentralize it and put democracy back into the hands of the people. Maybe Mino might disagree with me on this.
No, I know. I agree with you. I've heard that's what. I guess I'm just skeptical that the powers that be, we're not as free. We're not free. Period. Okay, I think we have this illusion of freedom. That's not. And when you see the institutional money coming into the crypto space, getting involved in ownership of exchanges and things like that, that's the end of your freedom right there. Your democratization movement ended right there. That's the same people.
I think Mino wants to get to the next article.
Okay.
Yeah. All right. This next will come from Cointelegraph. It's Grayscale reports vast majority of investments in Q1 2019 were in Bitcoin Trust. American digital asset manager Grayscale Investments reported a 42% growth in its product inflows in Q1 2019, over the previous quarter, the firm announced in a new financial report on May 13th. Grayscale was specifically bullish on major cryptocurrency Bitcoin, reporting that the vast majority of investments in Q1 2019 were in its Bitcoin investment trust. According to the report, Grayscale Bitcoin Trust secured, and pay attention to this, 3.2 million in average weekly investment out of the total average weekly investment of 3.3 million. As such, non-Bitcoin investment products amounted to less than zero point 0.1 or $100,000, the firm wrote. Non-Bitcoin investments include such products as the Grayscale Ethereum Trust, Grayscale XRP Trust, Bitcoin Cash Trust, and others, the firm explained. Total investment into Grayscale products increased from 30.1 million in Q4 2018 to 42.7 million in Q1 2019, with 73% of investors represented by institutional investors. The company also wrote that hedge funds increased their investments significantly from less than 1 million in Q4 2018 to around 24 million in Q1 2019. Founded in 2013, the major crypto venture capital firm Digital Currency Group, Grayscale's investment products include the publicly quoted Grayscale Bitcoin Trust, or ticker symbol GBTC, Grayscale Ethereum Classic Trust, ticker symbol ETCG, and a diversified product called the Grayscale Digital Large Cap Fund. On May 1st, Grayscale debuted its provocative Bitcoin commercial, Drop Gold, urging investors to invest in Grayscale BIT, Bitcoin Investment Trust, instead of holding to gold, which the firm characterized as an old-fashioned asset that weighs down investors' portfolio. This is Grayscale's website right here. It's grayscale.co. They have investments such as the Bitcoin Trust, Bitcoin Cash Trust, Ethereum Trust, Ethereum Classic Trust, Horizon Trust, Litecoin Trust, Stellar Lumens, XRP, and Zcash Trust. All of these except two are for institutional investors. The only two that retail investors such as you and I are able to invest in, and this is just information, is the Grayscale Bitcoin Trust and the Grayscale Ethereum Classic Trust. And these are them right here. This is the Grayscale Bitcoin Trust, ticker symbol GBTC, and the Grayscale Ethereum Classic Trust, ticker symbol ETCG. Grayscale under investments currently as of 4/30/2019 in April. Digital assets under digital asset holdings. The Grayscale Bitcoin Trust is, and this is in millions. That's 1.1 billion. And the Grayscale Ethereum Classic Trust is 27 million under holdings. It's rumored that they hold 1% of all Bitcoin in circulation. The commercial that the article hinted to was Drop Gold. This is it, dropgold.com. What I think this is just a PR ploy to get people to say, hey, yeah, they're right, drop gold, stop investing in gold. I'm not, neither Bitcoin or gold, either or. It has to pick one. I'm not that type of fan of that. But Grayscale is saying, per their financial reports, that investment has gone up and 73% of investment is coming from institutional investors. Any comments?
Look, man, greed, money, that recent run from Bitcoin, what are we talking about, over 100%?
Yeah, and 100%.
And when did that run start? When did it start?
It started it started, it was like 4,000 some odd dollars, I think 5 months ago.
I mean the calendar date.
I don't know specifically. I know it was 5 months ago. I
Yeah,
think
okay, yeah,
bottom
okay.
out in November or something like that.
Okay, yeah, maybe Christmas or something. I think it was something. It might have been December. Yeah, that's a heck of a move. I mean, this institutional money. I mean, they look. They got money like Warren Buffett, but they want to make money. They don't care, man. And I'm betting on the greed. I'm betting on the greed of man. Okay, and that in the presence of that institutional money is why I'm saying that Bitcoin or these cryptocurrencies they're gonna skyrocket. And when the dollar completes this move higher, which we're not there yet, not close, and so but we're gonna get there, and when we get to that point, the dollar is gonna continue that long ugly decline that we see on those charts since 1971. We're gonna have many years of a decline. We could have a decade of decline of the dollar. It's going to be long and ugly, and cryptocurrencies are going to have a great moment, period, in that time. So and that's what I mean in the short term. It could be like a decade, but after that, it's going to be trouble for them. But you know how much money can be made between now and then? They know. The whales know. That's why they into it. They
Mm.
know how to read charts too.
Okay,
And so if you think the volatility was something, that word works, that dog bites both ways. The volatility is not just going down. That means price spiking. So we love volatility when the price is going up. And that run up to 20,000 for Bitcoin, the institutional money wasn't really there. They wasn't really a part of it. So this next run, it's gonna be something like we've never seen before. So yeah, get your money ready to get in some Bitcoin and stay tuned here. We're gonna, watching the charts and watch this decline. I mean, maybe the bottom is in. We'll know in this pullback that we're gonna have right now with Bitcoin. We'll know if it don't make a new bottom, then this is it. We'll see.
Just to keep, everyone, FYI, we are not certified financial planners. If you want a certified financial planner, please go to cfp.net and look up one in your area. We don't give out financial advice, please.
And we're just some YouTubers.
right. YouTubers talking, having a chit chat.
This is entertainment.
Exactly. This next article also comes from Cointelegraph. Coinbase-backed stablecoin startup Reserve to launch Venmo-style app in Venezuela. They changed the title of this article, but the article is still the same. Stablecoin project Reserve announced that it will launch a crypto to fiat payment app in Venezuela and Angola in a press release shared with Cointelegraph on May 12th. In the same announcement, the firm revealed that it is listing its separate utility token, Reserve Rights, or RSR, on major exchange Huobi Global's token sale platform, Huobi Prime. Per the press release, the project stablecoin app to be launched for Android users via Google Play in the coming weeks will enable people and businesses to switch back and forth from their local fiat currency to the firm's stablecoin, the Reserve Dollar, or RSD. According to the announcement, RSD is a decentralized United States pegged cryptocurrency. Nevin Freeman, co founder and CEO of Reserve, told Cointelegraph that the reason the app is launching in Venezuela in particular is linked to the extreme level of inflation in the country, noting, and I quote, a lot of people, including some of our investors, discouraged us from starting in Venezuela. The hyperinflation there is the exact problem that Reserve is built to fix. And Venezuela is suffering the most inflation of anywhere in the world right now. So we left, so we felt that it had to be done, end quote. The press release claims that there are currently 16 countries with annual inflation greater than 20%, but the situation in Venezuela is particularly troubling, with the Venezuelan bolivar losing nearly 10% of its value every day. As Cointelegraph reported in February, the deepening of the country's currency crisis has seen increased use of Bitcoin and other cryptocurrencies in the region. Near the end of December, Dash celebrated the 2,500th merchant in Venezuela to accept the coin as payment. Back in August 2018, it could boast of only 1,000 merchants that accepted the crypto. Reserve also reported that it had landed a partnership in Angola with 7 Mobile Africa, reportedly the largest mobile importer in the country, to preload the app on all its shipped smartphones. As Cointelegraph reported in last year, June, in addition to Coinbase, the project had received backing from major venture capital names such as Peter Thiel, Sam Altman, Digital Current, Digital Currency Group, Arrington XRP Capital, Distributed Global, and GSR.io, among others. Huobi is currently the world's ninth largest crypto exchange by adjusted daily traded volumes, seeing over 2 billion in trades on the day to press time. In February, news broke that Venezuela government had introduced regulations for cryptocurrencies remittances within the country. According to the new requirements, the state has set out monthly limits and commissions payable to the National Superintendency of Crypto Assets and related activities on cryptocurrency remittances. Now, this article actually goes into in depth in what we were talking about with the Charlie Munger and Warren Buffett articles. So it's saying that because of the inflation in a lot of countries, this reserve dollar or RSD is other gives people in other countries access to the American dollar, quick access via their phone to go in and out their native currency to the American dollar. Um,
We
Trades,
just talked about that,
right? So that's what I said. This actually goes into depth to what we just talked about.
which is what we were trying to tell Dollar Will, or at least explain to the people listening to this of why it was, what value did it have? Well, this is the value that it has.
Yeah, that still sounds
Right.
like more a function of cell phone technology than the cryptocurrency itself. Because, like I said, they could just it gets to be a political thing. It's like you're using the cryptocurrency to get around a political solution. I mean, they could
But aren't
like you
all
said, they could use another country's currency using the cell phone. I mean, or
yeah, but aren't all nation state currencies political?
yes, yes, and so that's why I don't think that the the power forces that be will allow uh alternative to spring up that they can't control. We are not free, so they're going to control it.
Mhm.
All right. This next article comes from Bitcoinist.com. Whole Foods and these other major retailers are now accepting Bitcoin. Whole Foods, Nordstrom, and Crate and Barrel can now accept Bitcoin and other forms of cryptocurrency at their retail stores. Spend Bitcoin at Whole Foods. Whole Foods, Nordstrom, Crate and Barrel, and many other retailers are now able to accept Bitcoin and other forms of cryptocurrency. This new payment option is enabled by a partnership between the payments startup Flexa and Gemini, the digital currency exchange run by tireless Bitcoin advocates Tyler and Cameron Winklevoss. Tyler Winklevoss notes, and I quote, together, by providing Flexa with trusted custody and infrastructure, we hope to profoundly improve the payment experience and merchants who are currently subject to overly complex, expensive legacy systems of credit and debit cards stand to benefit significantly. End quote. The solution is based on a nexus payment terminals and between payment terminals to accept mobile payments via the Flexa app. Participating stores include Barnes& and Noble, Baskin Robbins, Bed Bath& and Beyond, Caribou Coffee, Crate and Barrel, GameStop, Jumbo Juice, Lowe's, Nordstrom, Office Depot, Office Max, Petco, Regal Theaters, Ulta Beauty, Whole Foods, and Express. Worth noting, all cryptocurrency deposited in the Spending mobile app is custodied with Gemini. And while this may seem counter to the ethos of Bitcoin, novice users will likely be more comfortable with this third party security arrangement, at least initially. The customers utilizing the consumer utilizes the app to scan their payment. Because the method of payment is transparent, the store cashier is unaware that the payment is with crypto. Ultimately, the merchant is able to choose their method of payment, fiat, cash, or crypto. This is largely being hailed as the first ease of use solution for consumers seeking to shop with cryptocurrency. Users can currently spend four cryptocurrencies: Bitcoin, Bitcoin Cash, Ethereum, and the stablecoin known as Gemini Dollar. This announcement is seen as a major step forward for Bitcoin's global adoption, despite the scores of persistent naysayers. Moreover, it offers a more secure way for point of sale transactions amid credit card hacks that continue to garner immense media attention. Tyler also explains the benefits for merchants who get on board and start accepting Bitcoin. He explains that merchants will, and I quote, one, get significantly less expensive and fraud resistant transactions. Two, can use the same payment hardware they currently use. And three, receive payment in fiat currency, not crypto. We believe that not only will this result in cost saving to the merchant, but to the consumer in the long term as well. End quote. Amazon next. Since Whole Foods is owned by Amazon, could the online retail giant be next in line to accept Bitcoin? Well, you can already purchase items on Amazon using Bitcoin and third party solutions like Bitrefill and gift cards. However, it should be noted that all of the solutions, in excluding Flexa, are reliant on third party services. This, of course, means that the retailers are not actually accepting Bitcoin directly, though it won't really matter as far as user experience is concerned. Nevertheless, if people begin to spending more cryptocurrency, it may make sense for these retail giants to accept Bitcoin directly and save on processing fees. Moreover, open source self-hosted software like BTC Pay Server make it possible to process the transactions yourself. This significantly reduces operating costs and dependence on third parties. All right, so if you all, whoever's listening, if you all didn't understand exactly what they were saying, when a few of the things that they were saying is when you spend your money via this app called, what's the name of this app again? Flexa. What happens is when once you pay for whatever you purchase, the merchant, let's say Whole Foods in this case, doesn't receive crypto. Gemini Exchange, which is owned by the Winklevoss twins, what happens is they do the converting behind the scenes. So if whatever you buy at Whole Foods and you use Bitcoin, whatever the price of Bitcoin at that moment is, Gemini will then take that price, liquidate that Bitcoin and into fiat and send that fiat to Whole Foods. All that is done behind the scenes. That's why they're saying that the Bitcoin is custody in the Gemini exchange, and also the Gemini exchange is behind the scenes doing the transactions. And the stores that are going to start accepting this are the stores I just mentioned. And it was something else that they mentioned that, oh, I want to say that this is a good first step in the long step of adoption for cryptocurrencies. Cryptocurrency itself, since it's like technical and a lot of people don't want to be don't want to deal with the wallets and trying to set things up. It's this is a good first step because everything is done behind the scenes. You just use it like you just use the internet, like you just use email, you just use cryptos. So this is a good first step for mainstream widespread adoption.
I think it's a excellent business idea for the Winklevoss brothers. I think it is. If you okay, so you're saying I come to the counter and something costs $3, and I want to pay for it in one of the cryptocurrencies that they support, that the wallet, that the exchange supports.
Yes.
Then I say I want to pay the equivalent of $3 US dollar in XRP or whatever, one of the cryptos. Then
Mhm.
then then that's sold from my wallet, converted to US dollars, and I walk out with my product.
Right.
Now, in the process, the Winklevoss brothers, they end up with my cryptocurrency, and they pay it on my behalf in dollars. Pretty good transaction there for them. I mean, all of this, when you was reading that, I was thinking about something I said a while back. If people don't learn how to read charts of cryptocurrencies, they're going to get screwed, because
Not
if you
necessarily.
if you have a wallet of various cryptocurrencies, you better know which one to use. you know, because you don't want to
The app on
sell.
your phone would tell you that.
Would tell me what?
The app on your phone, like Coin Market Cap, would actually tell you what the value of the currency is at the time that you're using it.
That's a static number. You would need to have chart awareness to know the trend that particular crypto is in. I would not want, with that knowledge of the trend of various cryptos that I have in my wallet, I would not be quick to spend the one that is fast appreciating. I would want to spend the one that's trending down. I wouldn't want to spend the one that's trending up. See what I'm
Yeah,
saying?
but you're
So
looking at it. You're looking at it because with your technical hat on. The everyday consumer doesn't have time to look at a technical chart to determine whether they should spend that crypto or not. All they have to do is just look at their phone and it says, "Well, this is what the value is today," and they say, "Oh, I'll spend this or I'll spend that." They'll they only have a few seconds to make that determination.
no, I'm not saying that you whip out a chart before you buy your coffee. I'm saying it's something that you would just need to be mindful of in general. Trends last a long time. We were talking earlier about a trend that's been running since Christmas. So you don't have to look at a chart before you buy something to know that this thing has been running high for 6 months. So I'm talking about just that kind of awareness. You know, so if you it's the same type of way that people don't use money, fiat money, properly, we are multiplying that kind of I guess ignorance, if you will. But hey, that's the free market. But by the same token, people that do have awareness about which cryptos are appreciating, that are in a trend that's been going up for a while or whatever, they'll make better decisions about which one to use, and they will be richer for it. There will be a tangible difference between the people with that awareness as to which currency to use and the ones that don't have that awareness.
By the same token, no pun intended.
But we will evolve to that. There will be articles about it, and people will be made aware of it, and there will be a lot of people will get hip to it, and they're gonna end up. They don't know it, but they're gonna become traders, because when you exchange your fiat currency for a product or an item in a store, you are engaging in trade. But people don't think of it that way. But having these currencies is going to bring that heightened awareness to people that they're involved in a trade and even a currency trade. So they're going to become traders, and they don't know it yet. Conscious traders. They're already traders. They're going to be conscious of it, and then they'll be richer for that greater awareness.
All right, let me get to this next article. Share my screen. This next article comes from Cointelegraph. Charles Hoskinson to launch security token blockchain with Polymath. Security token platform Polymath will build a separate blockchain for regulation compliant tokens with an Ethereum co founder, the company confirmed in a blog post on May 13th. Polymath, which has already contributed to the launch of over 100 security tokens, will now work with Charles Hoskinson on a new project dubbed Polymesh. Hoskinson, who after Ethereum became known for his subsequent cryptocurrency projects Cardano and IOHK or Input Output Hong Kong, will leverage his expertise to inform the development of the new platform. The partners confirmed the plans at the ongoing Consensus 2019 conference Monday. There are quadrillions of dollars of financial securities, and building a blockchain to secure them is an incredible, exciting task, Hoskinson commented in the blog post. Polymesh will form the basis of developers to launch security tokens tailored to market needs while fully compliant with local regulatory requirements. This Polymath says represents a progression from Ethereum, which serves decentralized objectives. And I want you all to listen to this. Those that are listening to this, Ethereum was not purpose built Ethereum was not purpose built with regulations or compliance in mind. It was built to enable unstoppable applications. The blog post explains. It continues, and I quote, by contrast, Polymesh is being built from the ground up with these considerations to become the underlying infrastructure for the world's capital markets, end quote. The announcement comes 2 months after Polymath partnered with funding platform Series 1 to expand the range of possibilities available to security token developers. In April, Hoskinson himself, meanwhile, appeared to criticize Ethereum's current purported stand along development trajectory as it continues with its Casper innovation. So, in the past, we read articles how other platforms are trying to tokenize security, such as your Teslas, your Apples, your Amazon, your Microsoft, and Nike stocks, into onto a blockchain. And what they were doing was going DX Exchange, Abra, and another exchange come to mind. What they're doing is tying, create a smart contract where you buy, let's say Tesla. And what the smart contract does is tracks the price of Tesla and coordinate that with how much Bitcoin you earn or lose. That's how they're doing it. With this, what Polymath is doing on this website, this is their site, polymath.com. What they're doing is trying to take all of the securities and put it on the blockchain. And they're doing that with the help of Charles Hoskinson and Cardano. Cardano is more of a tailored blockchain for different purposes, different financial purposes for different countries, and also. So Polymath is trying to take the securities. I'll quote what they're saying here. There are quadrillions of dollars of financial securities, and building a blockchain to secure them is an incredibly exciting task. So they're trying to tokenize the quadrillions of dollars that are out there in the world, not just America, in the world, of financial securities. That's something big. That's really big. Hello, am I?
We
Yeah,
can
yeah,
hear
I'm
you.
hearing you. I hear you.
Yeah, that's something big because now you can cut down on a lot of the. Uh, I don't want to say fraud, but rehypothecation, a lot of selling things that these full service brokers don't own. Now you can really tell how many securities are outstanding. That it's because of blockchain, you're able to track that information. So let's get to this next article. This next article comes from CoinDesk. HTC says its next smartphone will run a full Bitcoin node. Mobile phone manufacturer HTC wants to let its smartphone customers plug. Did I read this before? I feel like I read this before. I think I read this on Saturday.
You read this 2 weeks. You wrote this 2 weeks ago.
Yeah. But just what HTC is trying to do is offer their phone as to run a full Bitcoin node. Um, and what we talked about what that was, since Bitcoin's blockchain is gaining about 60 gigs per year, then it would either have to have a pruned down version of the blockchain and not what you would call a don't want to say a legacy node, but a full node that runs the full entire blockchain, only uh, up to date blockchain if you want to still run a full node on a phone. But then if you do that, it does make the blockchain stronger because more nodes on the blockchain makes it stronger. This is a Bloomberg report reported by Cointelegraph. Fidelity will start institutional Bitcoin trading within weeks. United States 7 trillion investment firm Fidelity will reportedly roll out Bitcoin trading for institutional clients in the coming weeks, Bloomberg reported on May 6. Citing a source who asked to remain anonymous, the publication revealed Fidelity's cryptocurrency focused spinoff, Fidelity Digital Assets, will be adding to the existing range of services. The subsidiary launched in October 2018 and has offered cryptocurrency custody for March this year ahead of planned over the counter trading. Now, the trading side will go live for Fidelity's users in as little as several weeks, the source said, and will primarily target large volume traders like over the counter offerings. While Fidelity itself did not confirm the timeframe, the company hinted that its future direction would involve would only involve more integration with the Bitcoin space. We currently have a select set of clients we're supporting on our platform, spokeswoman Arlene Roberts told Bloomberg. She added, and I quote, "We will continue to roll out our services over the next weeks and months based on our clients' needs, jurisdictions, and other factors. Currently, our service offering is focused on Bitcoin." The report comes on the back of a survey Fidelity conducted last week that revealed consistent appetite for Bitcoin among its target market. Specifically, 22% of the over 400 institutional investors who responded said they already own the cryptocurrency as part of their portfolio. Almost half were sympathetic to including it. More institutional investors are engaging with digital assets, either directly or through service providers, as the potential impact of blockchain technology on financial markets, new and old, becomes more readily apparent. Fidelity Digital Assets President Tom Jessup commented in an accompanying press release. Um, Not only Fidelity, we've gotten word from TD Ameritrade and E Trade. I actually called E Trade and asked them about their trading Bitcoin, and the spokesperson told me that first they're going to start offering Bitcoin futures first before they actually start offering Bitcoin trading. But Fidelity, which is $7 trillion in they hold $7 trillion in investments. That is a huge number. They're going to start opening Bitcoin trading for specifically institutional investors over the next coming weeks and months. And we already have read reports where institutional investors, we've read these reports since last year actually, where institutional investors are investing into cryptos. So this institutional money is coming into the cryptocurrency space. Any comments?
What exchange are they going to be using?
their own. There is called not digital, Fidelity
Yeah.
Digital Assets.
You see what's happening. Remember, maybe it might have been a year ago when I said that old money was going to be a threat to those exchanges. They're not going. There will be no revolution today.
Yeah, and this is Fidelity's. Let me take my dark mode off. This is Fidelity's Digital Assets.com. This is the exchange, and they're targeting institutional investors. And I agree with you because, like I said, when the first article talked about Cryptopia, these exchanges are not ready for this mass adoption, or not mass adoption, but mass investment into cryptocurrencies. They're not ready, and I hear a lot of people on not YouTube, but the crypto community on YouTube talk about bull run, bull run, bull run. It's not going to happen right now because these once a hack, a major, and I understand Binance had the hack, but they had the funds to cover it. But once a hack occurs there where people lose money on the same level, or if not higher than the Mt. Gox situation, that market is going to crash because you're losing faith in the ability to store these assets, and people are not going to want to hold. One of the alluring things about cryptocurrency is you being your own bank, but people don't want that. People are afraid to get hacked. Once you get hacked, there's no one you can call and say, somebody stole my Bitcoin, can you get it back? No, you it's all on you. So people are going to want custody solutions such as Fidelity, such as these big institutional companies custodying or keeping your cryptos, because like I said in the emails, once they're hacked, they can pay you back in crypto. They can pay you back in fiat. Just
See, I
pay them
mean,
back.
we think we want freedom till we see that freedom isn't free.
Or
Well,
it's
you have to keep in mind that Fidelity is a fintech by design. So they already have the customer base to support the market that they're trying to penetrate.
Right, and that's what I was saying a year ago. All of the traditional brokerages, I was asking the question a year ago, what's to stop them from coming in and basically taking over those exchanges? They already have the customers. Your retirement account is with them. People that are already trading are already with them, and people would much rather continue their relay. I believe that people would rather stay with those stodgy traditional firms that they've been with for the last several decades than go out here and start trading on some internet exchange that hasn't been around that long. And so yeah, so why wouldn't I want one statement in the mail, or one statement that includes my retirement and all my other stuff, and then I got my crypto stuff right on the same statement. So yeah, it's
Yeah, but for baby boomer, yes, that works. But for millennials and zennials, they're already invested into cryptos as it stands. In fact, they're the fastest growing demographic in terms of cryptos.
Yeah, but a lot of them are not invested. A lot of them are invested in crypto, but not invested in traditional types of investments. And that kind of ignorance of being young, that wears off. As they get older, they're going to understand they need the traditional stuff. So they're going to show up at those traditional places, and they're more than likely going to do it all in that one stop place.
I
Because
want to
everybody
I beg to
everybody
differ.
needs a 401k and other stuff.
That's not going to matter. That's not going to matter in places like Africa, which is an emerging economy, and in the Middle East.
Right? Yeah,
So
right. I'm just talking about here in America.
right. Well, America is not going to matter in that regard because your fastest growing demographics are coming outside of America, not within America.
And if you're telling me that there's growth someplace else, I'm telling you that institutional money in the world is going to go and dominate that area. That's the way it works. There's no freedom, no
I want
revolution today.
to
There's no proof of that.
History. What market has ever sprang up anywhere that old money didn't come in and eventually take over it? Doesn't work that
And what I'm
way.
saying is I'm saying you have no proof that it's going to do that right now. Or I mean, in the near future, there's no proof of that.
Other than history. That's the only proof. But
That
any
history,
well, if you pick any subject, we can't tell. The only thing we can ever use to project the future is the past. That's it. That's not by that measure, no one can ever prove anything in the future.
go ahead, Lionel.
Um, Takeover in the chat. It says July back exchanges is expected to launch. They didn't actually say they were going to launch in July. They said they're going to do test. They'll start their testing in July. So they may not launch in July. And I understand. I understand people want the market to go up, to go up, to go up, but I just don't think with this sudden run up, it was too fast. It's too. It was too fast, and that's not sustainable. Well, I've seen it back in 17, and that that quick run up is not sustainable. People get scared. Um, it has to be, in my opinion, longer, drawn out run up, other than a quick shoot up.
I don't
That
agree. I think that quick shoot up, that's going to be that's the normal for this. I think it's going to shoot up faster than we've seen. I'm not saying this is it. I'm on the side. Let's see how far it falls in this correction. But whenever it does establish that bottom, I think the way you saw it just shoot up, I think that's what we can expect. I mean, it's that's what happened in the .com era. When you get something that's got the attention of the masses, that's what happens. It's going to be hyperbolic. It's going to go crazy, and that's why the institutional money is getting in position to profit from it. Everybody, every don't, I mean, the people with gray hairs are not fools. Now we've seen this rodeo before, and I haven't heard. They might talk about the usefulness of crypto and Bitcoin, but I've never heard no gray haired experienced trader say that this thing is not going, in terms on the stock market side, is not going to go hyperbolic. I've never heard that. They might say it's garbage, but I haven't heard them say that it's not going to go ballistic on the charts.
and get to this. This one is a longer article. I'll just read half of it. Most of the good information is in the first half anyway. Libra project. Facebook stablecoin aims to conquer online payments market, report suggests. Facebook potential expansion into crypto has been widely discussed in the past few months. Along the social media giant has, Although the social media giant has not confirmed anything beyond having a blockchain department, new details about its digital token project continue to surface. Most recently, the Wall Street Journal reported that Facebook is talking to major payment networks Visa and MasterCard to raise $1 billion for its crypto project, which reportedly entails a stablecoin along with a crypto-powered online payment system. Facebook has been rumored to be involved with cryptocurrencies for at least a year now. In May 2018, the online publication Cheddar reported that the social media titan is very serious about launching its own digital token for its 2 billion users. In response, the corporation did not comment on having a potential cryptocurrency in the works, but shared a short statement regarding its newly established blockchain team. Quote, like many other companies, Facebook is exploring ways to leverage the power of blockchain technology. This new small team is exploring many different applications. We don't have anything further to share, end quote. The existence of Facebook's blockchain research team remains to be the only official confirmation that the social media corporation is involved with crypto. The arm is led by David Marcus, ex PayPal president. Notably, soon after joining Facebook's blockchain department, he had to leave the Coinbase board of directors, of which he was a member, to avoid conflict of interest. Marcus has also admitted to having a long time interest in cryptocurrencies. In December 2018, the The social media corporation's blockchain team, once categorized by markets as small, had nearly 40 employees. As per media reports, in late March, 5 new blockchain related positions were announced, suggesting that the technology department might continue expanding in the near future. In 2018 as 2018 was drawing to a close, rumors about the Facebook-run cryptocurrency reignited with more new details. Specifically, Bloomberg reported that the social media company is making a cryptocurrency for users of the messaging service WhatsApp, which Facebook acquired for 19 billion back in 2014. This is interesting right here. The token will allegedly allow users to make money transfers within the messaging app and will focus on the remittances market in India, where WhatsApp is reported to have more than 200 million users. According to data from the World Bank, the country received nearly 69 billion in foreign remittances in 2017, which is 2.8% of India's GDP. Further, Bloomberg sources said that Facebook is developing a stablecoin, specific, specifying that the social media outlet was still figuring out which asset their token will be tied to. In response to requests for comment at the time, Facebook once again forwarded the statement about exploring ways to leverage the power of blockchain technology. In February 2019, the New York Times wrote that Facebook is hoping to succeed where Bitcoin failed. Wow, okay. Revealing more details about the social media titan's alleged crypto project. According to the report, Facebook plans to rebuild its messaging infrastructure and merge its 3 wholly owned apps, WhatsApp, Messenger, and Instagram, under one platform. As the New York Times wrote, this will provide a future crypto token with exposure across the combined 2.7 billion who use the 3 services each month. Additionally, the New York Times quoted 5 people who have allegedly been briefed on Facebook team's work as saying that the corporation's token will likely be a coin that will be pegged to the value of traditional currencies instead of just a US dollar. Each Facebook could guarantee the value of the coin by backing every coin with a set of dollars, euros, and other national currencies held in Facebook bank accounts, the report specified. Excuse me. Okay. Then it says new details 1 billion stable coin for in house crypto payments. So they're trying to look for $1 billion. Um, okay, these are my thoughts on this one. The article points out how WhatsApp has about 200 million users in India and that the country of India received 69 billion in remittances in 2018, which equates to 2.8% of India's GDP. And it has been reported that Facebook is in need of a new revenue stream. I believe Facebook is looking at the remittances market as a source of continuous revenue by charging a smaller fee to send money across borders compared to what the current money transfer businesses are charging. Facebook combined Messenger, WhatsApp, and Instagram, combining these 3 entities actually, um, would provide their stablecoin with a large platform of about 2.7 billion people to flourish. I can imagine not only being able to send money to someone within and across borders, but also to others on Instagram. It sounds like Facebook is going to peg their stablecoin to a basket of traditional currencies, presumably where their users are to be able for presumably where the users are to be able for a Facebook user to cash out, quote unquote, cash out of Facebook stablecoin and into their own native cryptocurrencies. This fake Facebook has potential to do this. Facebook does have the audience, 2.7 billion people. I think that's a third of the globe, and they do have the platform. Um, I don't think this is like exact crypto in a traditional sense. It's just a, but to shy away from that, I just don't trust them. But that's not to say that it won't succeed if it gets off the ground. And this $1 billion that they're looking to get to fund it, I think is for them to put in the in Nostra Vostra type accounts in the different countries that this is going to roll out to. So by me thinking that, I think that this will not roll out to all countries equally. It'll roll out to different country by country, and they're going to put this money into Nostra Vostra accounts in different countries. Then when people trade, send money back and forth, they'll have the money in those countries' accounts to cover those expenses. Then they'll grow it from there, go into other countries. But I just don't trust Facebook, to be honest. I really don't trust Facebook.
They already lost all of the passwords, or I should say that their WhatsApp was already compromised. On top of the fact that their Facebook accounts were actually compromised some months ago. So I personally would never put my my identity and whatnot into Facebook's platform. But I understand what their goals are, but they've already been compromised as of last week.
Yeah,
You would have to be crazy to not have. They would have to be scrutinized by the government from the major agencies as to what they're doing financially with people's identities, because not many states have data protection laws. I think Massachusetts, California, New York, New Jersey, and I think like two more have data laws. I think I want to say Washington D.C. If you lose a person's record, and you're a corporation, it's up to $50,000 a record. So if you lose 1 billion records, you're out of business. I don't care who you are out of business. There is no way you're going to come back from $50,000 a record. So Facebook is taking a big risk here, at trying to implement something like this, especially with all these breaches happening. If they want to be a financial power or want to be in the financial markets, maybe at this point the talk about breaking up Facebook could very well be in the best interest of Facebook at this point to break them up.
yeah,
Yeah, I think Facebook has to go this route, and they have to fix the security issues, or else they're out of business anyway.
right. And don't you know there was something else in this article that pointed out. I'll just read my thoughts on it. The paragraph notably The paragraph starts out notably the in-house payments might be performed via a user's Facebook profile. The social media platform is purportedly developing a type of checkout option that could be, oh, I just don't trust Facebook, that could be uh, conveniently used on other websites, similarly to how a Facebook profile can be used to log into many platforms without having to sign in. It's very telling and can provide a huge clue to how this Project Libra can play out. So when you go to different sites and they ask you if you want to log in via your Facebook account, and people do that. Now you're adding this fintech layer onto that where you log into a website where you got to pay for stuff and you pay it via your Facebook Libra coin. Now they have the information of where you shopped at, what you bought, what you potentially buy all the time, the trends and all of that. All that information that Facebook has. That is a lot of information.
Yeah. Well, just to go back to the last point. When this a gold rush. This crypto thing. When we had the .com rise of skyrocket, we didn't have any social media.
Mm.
And Facebook, what? They're like would you say that they're the most powerful social media company
Yes.
in the world?
Them and WeChat, but WeChat is government like
Yeah.
led. So yeah.
Yeah. So if Facebook is helping to fuel cryptocurrency, just to go back to that last point we were making in the last article, how can the prices not spike? That's just going to be the new normal.
And I agree with Dominic Anthony. He said good reason not to trust them. But to the layman Facebook user, they don't really care, let alone know about their information breaches.
Right, right.
And I agree. I agree wholeheartedly with that. If I tell people, I try to tell people about this and try to break it down for them to understand it. To them, it's like, okay, what that has, I don't care. They have this I don't care look on their face.
Well, because they're ignorant, right? So they don't really understand personal identifiable information. They don't understand the significance of it until it actually impacts their life. I've seen people lose their identities and struggle to, to live their day-to-day lives because they have no identity anymore because it's been compromised. So until they have to live that way, they're just not privy to what the impact is.
Mm. Now, this next article really says a lot. This one's from Cointelegraph again. The U.S. Senate Banking Committee presses Facebook for info on crypto project. The Committee on Banking, Housing, and Urban Affairs of the United States Senate is seeking information on Facebook's reported cryptocurrency project. The committee addressed its concerns to Facebook founder and CEO Mark Zuckerberg in a letter on May 9th. In a series of questions, the Senate highlights certain aspects of consumer protection, asking Zuckerberg how the company, pay attention to this, how the company plans to protect consumer financial information. The committee also asked Zuckerberg whether Facebook shares or sells consumer information with unaffiliated third parties. The social media giant become embroiled the social media giant became embroiled in controversy last year when it became the subject of several scandals surrounding user data privacy. In April 2018, Zuckerberg himself testified before Congress regarding the firm's practices. Canadian legislators have also called on Zuckerberg to testify after it was found that Facebook violated the country's privacy laws. Wow, even violating other countries' privacy laws. The committee further asks whether Facebook has any information on individuals' credit standing, credit capacity, credit worthiness, or information that could affect their ability to secure credit. Rumors of a Facebook coin surfaced in December 2018 following a Bloomberg report which stated that Facebook was making a token for use on WhatsApp for the remittances market in India. And um, these two paragraphs are redundant. I'll read them anyway. In February, the New York Times reported that the token would be usable on multiple platforms, including Facebook itself and Instagram. Unnamed sources further stated that the token would likely be a stablecoin pegged to a fiat currency. Facebook is reportedly seeking $1 billion in investments for the token project from major payment networks Visa and MasterCard. So even governments don't trust Facebook. And not only that, they ask legitimate questions. Um, if Facebook has any information on individuals' credit standing, credit capacity, credit worthiness, or information that could affect their ability to secure credit. And also, Facebook is breaking other countries' privacy laws. Facebook is reckless at this point. They're reckless. And now they want people to use their money to get, and with that comes more information gathering. I just don't trust Facebook. Any comments?
Hello?
Yeah, yeah. Dollar Will, can you hear me?
Yeah, I hear you now.
Yeah. Have any comments?
Um, how do you think this is going to end up? I mean, I think this is going to end up. They're going to have to come to some kind of deal. The government's going to. They're going to have to come under some kind of strict guidelines for many years. But I mean, I can't see the government doing anything to put Facebook out of business. I think we are going to have them placed under much greater scrutiny.
I don't think they're going to go out of business, but the scrutiny has to be there.
Yeah, so we need to remember this the next time we hear people talk about, no more big government, no more big brother. This is why you need it, because some companies get to be so big and powerful that really only government could put them in check. This is one of those times where you need big government.
Mm. All right. Let's move to the next one. Ethereum Consortium launches new enterprise tools with input from Microsoft and Intel. Member-driven blockchain standards organization, the Enterprise Ethereum Alliance, or EEA, has released two new specifications aiming to accelerate and enhance blockchain implementation for enterprises. The news was shared with Cointelegraph in two press releases on May 13. The EEA, which counts over 500 members, describes itself as a standards organization whose chapter is to develop open blockchain specifications that drive harmonization and interoperability. EEA members include global consulting firm Accenture, banks Santander and JP Morgan Chase, blockchain incubator Consensus, Big Four auditor EY or Ernst& Young, tech giants Intel, Microsoft, and IBM, and blockchain consortium R3. One of today's newly released specifications is a set of standard application programming interfaces, or APIs, published as the EEA Off-Chain Trusted Compute Specification version 1.0, which support development work with programs for blockchain transactions that demand privacy, Oracle services, and compute-intensive workloads. The off-chain solution is reportedly designed to enable enterprises to choose the most appropriate trusted compute technology for their use cases, supporting methods such as trusted execution in environments, zero-knowledge proofs, and trusted multi-party compute. In a statement accompanying the solution's release, EEA Executive Director Ron Resnick announced in particular the input of EEA members such as Microsoft, Intel, Banco Santander, and Consensus. He noted that many enterprise blockchains use cases demand complex privacy, security, throughput, and latency solutions, and thus that, and I quote, temporarily moving some transactions off chain for computation elsewhere and then returning a summary to the main chain is a promising method for achieving such requirements. End quote. EEA's parallel new release is the Enterprise Ethereum Client Specification version 3, which reportedly simplifies and makes the client's permission systems more flexible. To develop the latest specification, the EEA Technical Standards Working Group tackled performance and interoperability issues based upon feedback from users and cross-industry. EEA Special Interest Groups. It also headed the implementation experience and consumer feedback for block apps, Clearmatics, Consensus, and JP Morgan Quorum's enterprise blockchain software. As Cointelegraph reported on in April, the EEA launched a blockchain-neutral token taxonomy initiative which will seek to define tokens in non-technical and cross-industry terms in a bid to drive enterprise token adoption at scale. All right, so what the EEA is doing, which has over 500 members, and it mentioned some of the members are these are real Fortune 500 companies. These are real major companies. Some are Fortune 500, some are Dow Jones, some are not. But these are all big companies, and some include the firm Accenture, Santander, Banco Santander, J.P. Morgan Chase. Yes, that J.P. Morgan Chase, the Jamie Dimon J.P. Morgan Chase, blockchain incubator Consensus, Big Four auditor Ernst& Young, tech giants Intel, Microsoft, IBM, blockchain consortium R3, which is a banking consortium, and others. I think Walmart is in there, but they are launching standardization. This is basically standardization where all three, not I say three, all 500 members of the EEA, and that list can grow and shrink, can all do business with each other. And it talked about interoperability, where a computer system takes information and uses it from different sources of information, so they can. It's basically a standardization of the EEA protocol. Ethereum Enterprise Alliance, that is. Any comments?
What are we likely to see like on the ground and from coming out of this in terms of procedural changes? What are we going to notice?
Now, well, as customers, we may not notice a
Or
lot.
even not just as customers, but maybe as employees.
It depends. It depends on the role that you have in a company. If this is more of a blockchain, and blockchain is a accounting solution, 3 entry accounting solution. So you may see not much hiring of accountants. You may see
I
like
was getting ready to say that. I was going to say how it's going to affect like junior accountants and
right
stuff.
supply chain managers. You may not need as many of those. You understand what I'm saying?
Oh yeah,
So it because since you have a standardization and
program.
hello, say again.
I'm saying they better become blockchain programmers.
Right. So since you're seeing the standardization of EEA members, Enterprise Ethereum Alliance, and this is when, and also as a side note, when people say Ethereum is this, Ethereum is that, when you have this and you have these companies that are in your alliance, you have to now be seen as something that's big now, and they're using your technology. But now that you have, it's over 500 members, so you have these people using this technology, these different companies that are from different spheres. I don't want to use the word spheres, but different areas. A bank and a tech giant and consulting firm, but they're using this program that they can is interoperable with each other's firms, where information can be sent back and forth and on this technology, and they don't have any drag up on information. It can be, what's what I'm looking for here. It can be used easier. So that has a lot. That has a pressure for people that are in these positions that you may not need. You may not need all of them accountants. You may not need all those lower supply chain managers that are counting things by sight. 1, 2, 3, 4, 5. You may not need all that. So this is that. Let's get to this next one.
Universal basic income.
Yeah. Now this is interesting. This will come from CoinDesk. Microsoft launches decentralized identity tool on Bitcoin blockchain. This makes Bitcoin blockchain even more um, worthy, um, viable, in my opinion. Microsoft is launching the first decentralized infrastructure implementation by a major tech company that is built directly on the Bitcoin blockchain. The open source project called Ion deals with the underlying mechanics of how networks talk to each other. For example, if you log onto Airbnb using Facebook, FYI, they really talk about Facebook in this. If you log onto Airbnb using Facebook, a protocol deals with the software that sends the personal information from your social media profile to that external service provider. In this case, ION handles the decentralized identifiers, which control the ability to prove you own the keys to this data. Christopher Allen, a crypto veteran and the co founder of the World Wide Web Consortium Working Group for Decentralized Identity Solutions, told Coindesk that Microsoft's move could impact the entire tech industry. A lot of enterprise infrastructures use Microsoft products, Allen said. So they so if they integrate this into any of their infrastructure projects, they'll have access to DID or decentralized identity. Indeed, York Rhodes, a program manager on Microsoft blockchain engineering team, told CoinDesk that Microsoft's team has been working for a year on a key signing and validation software that relies on public networks like Bitcoin or Ethereum, yet can handle far greater throughput than the underlying blockchain itself, underscoring the fact that Microsoft it was a founding member of the Decentralized Identity Foundation. Rhodes said, and I quote, "There are systems that we have at Microsoft that give you permission to an enterprise context, in an enterprise context, a product called Active Directory that we think need to be able to recognize these DIDs as well." End quote. He added such infrastructure projects and services related to Azure are among the Microsoft's most popular offerings. This tiny piece in a giant machine then could have far-reaching impacts. Meanwhile, an anonymous source with knowledge of Microsoft project told CoinDesk that Ion will shift from using Bitcoin's testnet to the Bitcoin mainnet later this year. As such, any tech-savvy observer could run a node and contribute to this project, said W3C's Allen, I quote, "To have Microsoft say they are not scared of Bitcoin, and in fact, it has some very good properties and are willing to take advantage of these properties is, I think, a step in the right direction." End quote. Stepping back, differing differences between a DID under the hood versus current infrastructure speaks to the heart of users owning their own content and access. In the example of Facebook and Airbnb, with a DID or decentralized identity, Facebook might be able to shut down your social media account. I'll reread that. In the example of Facebook and Airbnb, if you have a DID or decentralized identity, Facebook might be able to shut down your account, your social media account, but could not revoke access to all the tools that relied on the Facebook ID to log in. Plus, all those personal photos on Facebook would belong to the user, the holder of the DID. Yet, Facebook in particular may not align with Microsoft's approach. Another anonymous source told Coindesk that although Facebook has been invited to participate in Microsoft's DID project and community efforts, so far the social media company has declined and instead continued to follow its historic approach to user data, which I do not trust Facebook. They're going in a different direction, and that's not as decentralized, the source said of Facebook. I'm going to stop right there. But basically, what they're saying is Microsoft is building an application on Bitcoin's blockchain that allows users to control their information and, and to control their identity on the internet and not the other way around, where entities such as Facebook and Airbnb and so forth control your information. And they also said that how Facebook may not align with this, and they have not so far been going to these conferences.
Well, they don't. What Microsoft is doing is building GDPR within the application itself, so that you don't have to opt in or opt out. It's GDPR by default. So general data protection regulation means that the user wants to have their data forgotten or deleted or recovered, um, then it can be put back in their possession. Then what that means is that the user is in control, or the institution, which would be the European Union, would be in control of that decision. Not Facebook, not the utility companies, and not any of the uh, softwares as a service. So whether Facebook decides they want to go to the conference or join up, anyways, it's not going to matter, because data protection regulation laws are going to force them to comply anyways. They have a vested interest in maintaining user data and all those user pictures, because they make a profit off of that. Their profit is off the user itself, um, and not anything more. So if you have to if you have to decentralize all of those components of the user and their monetization of it, then they're going to stand to lose out, and they will become irrelevant at some point.
Okay, gotcha. I understand. I understand. Any comments, Dollar Will?
No, sir.
Okay. So Facebook can be forced to comply.
They will. They won't have any choice, and that's what
Okay.
they're trying to fight.
Gotcha. Gotcha. All right. The next one comes from CoinDesk. Boston Fed announces plan to design a blockchain supervisory node. Interesting. The Federal Reserve of Boston is starting a new blockchain experiment this summer. The Massachusetts state regulator has been one of the earliest and most involved government
We covered this
bodies.
last week.
We did?
Yeah, we covered all this last week.
Okay. You want to reiterate?
What the Boston Fed is doing?
Yeah.
Oh, basically, the Boston Fed is investing into their own BC. So how that pans out, it's up in the air. I mean, it's just one Federal Reserve. So
Okay.
each Federal Reserve is their own independent institution, if that makes any sense.
Okay. All right. Let's get to this next one. This next one comes from CoinDesk. Title: Blockchain's adoption. Challenge is a human problem, not technical. As technology infiltrates our lives, a fundamental conflict is emerging in society, one brought on by two intertwined forces. First, our existence is framed by a never ending race for efficiency and productivity, or in the case of the crypto community, for the perfect model, the perfect consensus. But this clashes with the human search for a purpose and meaning, whose discoveries often invalidate applications of technology that otherwise seem perfect on paper. It's in the context that the broad concept of blockchain matters. Since my very first encounter with it in 2011, and over the course of my experience as an investor, on, I just thought about something. Never mind. Entrepreneur and corporate executives in this space, I have come to the realization blockchain is not a technology. It, in isolation as a model, it will not be the solution to all our problems as propagated by innumerable hyped up articles. Blockchain as a concept has the potential to be extraordinarily powerful if and only if we as a society are willing to change our own direction and purpose. The core characteristics of blockchain, with its inherent intent to generate any ostensibly immutable record of history, a commonly shared truth, offer us a fresh opportunity to rethink and redesign our behavior, to organize our decision making, and to reach the hearts of our existence. It forces transparency while highlighting human inefficiencies. bringing to light our propensity to deceive in order to usurp power. As it highlights that is as it highlights that is we, the humans in the middle, who stand as the principal obstacles of our efforts to build the best version of our societies, our companies, and our world. In short, the principles that underpin blockchain point to a potential resolution of the conflict that technology change imposes on our search for meaning. The irony is that if that potential is to be realized, we must also embark on some deep soul searching and enact change from within. I'll read this last part right here. The real obstacle, a megalomaniac culture. One can't be forgiven or concluding that those with the power to organize modern society have imbued it with a kind of melancholy meaninglessness. We take on jobs that do little else but shuffle papers, or we move financial line items from one place to another, often without adding any productivity or positive outcomes. We complicate things. We create charts and models and presentations to uphold our smarts, our egos, and most importantly, our power. Having lived and worked in 14 different places around the world, I can vouch for the fact that this power driven structure, a system that thrives on fear, is universal. Human society itself needs a change before technologies and new ideas can have a meaningful impact we seek. Without that, blockchain will be nothing but a buzzword. We're all aware of the resistance to innovation that exists within companies and other organizations, but we tend to describe it in clinical structural terms as so miss the bigger picture. We need to go deeper. We must address the underlying fears that guard against meaningful change. Unless we stop being I can't pronounce that word, I apologize, voracious. This hyper blockchain will only have random impact in random places. We will be, excuse me, we will be back to shuffling, and this time not of paper but of exabytes and exabytes of data controlled and manipulated by an exclusive few. So basically, what the saying is, as humans, even though blockchain, the principles of blockchain is an immutable ledger, an updated immutable ledger, telling you what's the latest of whatever it is. It's whatever information is tracking. As humans, we need to change in order to adopt what blockchain has to offer on a major level, on a more wide level. It also, some of the points it pointed out to me touches on the other articles that we talked about this evening. Um, our propensity to complicate things when blockchain has the ability to simplify things. As humans, we complicate things and we make things harder than they need to be. Whereas as this new technology, if we are willing to adopt it as a mass in places that it has the ability to change. Again, blockchain isn't for every part of industry, but that part of industry that it can change, if we're willing to adopt it and let go our biases to, like the article saying, to uphold our egos, then we can get much more out than we are getting now. Any comments?
Um, if not blockchain, what? So I mean, blockchain. It's not like there's a competing idea.
Well, there have been competing ideas, but nothing has been as fully supported as blockchain has been. Mostly because blockchain is tied in with Bitcoin, right? So that's where the adoption really comes in at. But for other platforms, like some of the military applications of digital encryption mechanisms, they haven't really garnered a whole lot of support because they haven't been branded as well as blockchain has. So most of the issues, like the article is pointing out, is not really technical. It's really just human based. Um, whether people adopt it or not, and what the application aspect is where the problem is.
This sound like something that time will solve.
Not necessarily. There's a technical aspect to it. Scalability is depending on which blockchain you're talking about using. So if you're talking about using something like, let's say Ethereum, well, Ethereum is going to be susceptible to the 51% attack, right? To a known hacker. I was at a security meeting last night, which is why we didn't have the hangout last night. We were kind of delayed on this. I watched an attack how an attack was demonstrated against a node, and that that's very scary that can happen. So that those sort of things are human errors and not technical errors. So
wow.
I mean, these are very skilled very skilled people that can actually perform these sort of top down compromises on a blockchain.
So what are you gonna need? We're gonna need some AI to defend ourselves against these people.
No, it just needs more QA, more QE, more quality assurance, more quality engineers. You need people like that can look over code and stuff like that can actually manage it best. I think a lot of people think that once you get certified for blockchain, or you get certified in one thing, then everything's solved, and that's not necessarily the case. A lot of your bad coding comes from lack of eyes, for one, for peer review, and number two is just human error. So a lot of your issues do have human error involved in it.
Wow, you piqued my attention with that. That was because you made me think about why I left broadcasting. Same kind of thing. When technology and digital and everything came, fewer eyeballs was involved, and the quality went down.
Yep. So there's still a job role involved in just any sort of software development. Blockchain is just one of them. Happens to be one of them, but you still need eyes to look over code. You still need eyes to be involved in the project management aspect, or what we call DevOps. And you still need analysts. They don't really title it a blockchain analyst, but analysts would be the people who are going to be able to do code analysis. So blockchain code analysis, that would be quote unquote a blockchain analyst. And they haven't really crafted that title yet, but that's where the market is going. I guarantee you, in a few months, you'll start to see titles like blockchain analyst come into play. Because QA analyst would be essentially the same thing, but a blockchain analyst would probably be a boutique term that you'll start to see by the end of the year.
All right, yeah. Yeah, that's all I had for today.
All right. Well, thank you all for joining us. Please hit the like button as you leave. Share the video if possible. And we are not certified financial planners. If you want a certified financial planner, please go to CFP.net. Look up one in your area. Also, don't forget to check out Dollar Will's channel. Dollar Will, you can drop your the link to your channel in the chat.
All right, I'll do that. And you know, I'm gonna be for the folks who are getting the Patreon private lessons. I'm gonna be starting up a my brain is gone. A demo trading. I don't want to call it a competition, but we're gonna put this stuff into action because this stuff you can't really practice or grow in learning how to chart or trade if you're not doing it. So I realize that I don't think that the information is really getting across. So gotta start to put this stuff in action so people can experience on a personal level the agony of defeat and the thrill of victory. But thank you, and I will drop that in the chat.
All right.